In this video, I'm going to take a look at diamond tops and bottoms. Now, these formations basically, and they don't have to be a perfect diamond. I just happen to be drawing one. You know, they can look more like this. What happens is you get a run, and this is a top, obviously. This might be the bottom, diamond bottom. You get a run higher in the market, and then you start to form a couple of, it's like a broadening formation that we talked about a couple videos ago, but then starts to tighten back up. And then once you break down, what this tells you is that there's been a lot of soul searching in the market, so to speak. And suddenly there's bearish pressure that people are willing to really get involved in. And everybody in this diamond is trapped. So the market needs to break down. They need to cover their positions. In a downtrend, you can see the exact same thing, but then an explosive move up. And that, of course, is a diamond bottom. Now, there's no real measuring stick in these. A lot of people will try to aim for the height. That typically works out, but there isn't like a bona fide measuring stick, if you will, like you have with some other type of patterns that we'll be going through in this module. So let's take a look at what this looks like. I'll go ahead and pull up the trendline tool, and you can see that we have seen a lot of noise in this area, and I can draw trend lines like this, like so, to form the pattern itself. And, you know, we're in a nice uptrend, and then we start to lose a little bit of confidence, and then we finally break back down. You can see that we test the midpoint of the triangle and then the diamond, and then break down from there as well. So the question is, you know, what would you have aimed for? Well, this is about $8. So $8 from 73, you know, that's got you right around 65-ish, and that's where you do end up. And now you've gapped lower and you're starting to see more resistance. So clearly that is a viable signal. Now here in Teva Pharmaceuticals, we have a bottom, and it's, you know, kind of a sloppy, and some of these will be, you'll see this occasionally. I'll go ahead and extend this out just a little bit more. And there you go. It's a diamond bottom. And what's happened is we've sold off, and then there's just a lot of indecision, and then we broke higher. Now, something that I'll point out here, not to make this more complicated than it needs to be, because, you know, we got basically our height. But another thing, and you'll see this a lot as you go along, and this makes these type of signals even more important. Notice that we have higher lows going into the exiting as well. You know, we continued the downtrend. That shows that there is still a bit of conviction. But the next time we make this higher low, then all of a sudden you've got people kind of wondering whether or not we can hang on. So a lot of that comes to short covering, and eventually we break out to the upside. Diamond patterns and tops and bottoms are a little bit more difficult to trade than some of the other patterns. The main takeaway here is you need to keep in mind that it's a loss of confidence in the overall trend.